For those who believe in Tesla's long-term potential, now could be a good time to buy Tesla stock. The stock is currently trading nearly 36% removed from its all-time high, which could represent a good opportunity to buy it at a discounted price. In addition to trading far below its peak value, there are several other factors that could positively impact the price of Tesla stock over time, primarily the growing electric vehicles market. In this video, we'll explore why Tesla's stock could be a smart investment choice considering its recent performance and market trends. We'll also consult the algorithmic price prediction for Tesla to see where the stock might be headed next. Tesla might be a good investment if you believe the company will continue to dominate the electric vehicle market, and there are solid arguments to support that outlook. In the past 2 years, Tesla's market share of battery electric vehicles sold in the US remained above 60%, despite its competitors' growing efforts to cut into the company's dominant market presence. The number of EVs sold in the past couple of years in the US has increased considerably, from nearly 99,000 units in the first quarter of 2021 to almost 259,000 in the first quarter of 2023, which is more than a 160% increase in just 2 years. In addition, Tesla considerably ramped up its vehicle manufacturing in the past couple of quarters. According to the quarterly earnings report, Tesla delivered 422,000 vehicles in the first quarter of this year alone, up from just 184,000 in the same period in 2021. The spike in deliveries resulted in a 47% year-over-year increase in revenue, which reached $24.9 billion in the second quarter of this year. Moreover, there seems to be significant room for growth for electric vehicles in the long term. If we assume that the number of electric vehicles in comparison to vehicles with internal combustion engines will continue to increase, Tesla could be in a prime position to take advantage of this trend. Last year, the number of EVs sold accounted for less than 6% of all light vehicles sold in the US. By 2030, US legislators aim to increase the share of new EVs sold to a whopping 60%. For the sake of the argument, let's say that electric vehicles will account for 50% of all light vehicles sold in the US by 2030. If Tesla manages to retain just half of its EV market share, the company could sell a whopping 2.4 million units in 2030, 3 times as many as in 2022. Despite the growing manufacturing output and the clear trend of the EV market's growth, Tesla's stock price has taken quite a hit in recent years. After reaching its all-time high above $400 in November 2021, the stock lost 3/4 of its value and was trading at just $104 per share in late December 2022. Since then, Tesla has recovered a decent chunk of its losses but is still heavily discounted compared to its all-time high. According to the Coin Codex stock forecast algorithm, Tesla is expected to record a relatively modest gain of roughly 6% in the next month. In the next 3 months, the stock could go on a massive rally which could coincide with the Federal Reserve lowering interest rates for the first time in over a year. This could push the price north of $480, which would be an 85% increase over the current market rates. The stock is expected to peak above $700 in December 2023. After that, a correction to the $300 level is expected in the first half of 2024. Many investors are wondering how Tesla will perform over the long term and don't really care about short to medium term price movements. After all, the electric vehicle market still has substantial room for growth, and Tesla seems to be positioned very well to take advantage of this. So, how high could the stock reach on a longer time scale, for example, by 2040 or even 2050? Let's assume that Tesla follows the historical growth trend of the most important US stock market index, the S&P 500. If Tesla grows at the same rate as the index, which is 11.8% per year on average, the stock could reach $1,900 by 2040, which would be more than 4 times more than its current all-time high. Under that same model, Tesla could approach $6,000 by 2050. That would put the company's market cap at a whopping $18 trillion, 6 times more than Apple, currently the largest publicly traded company. Whether the stock could reach as high in the future is predicated on whether the broader economy and the stock market will grow sufficiently to support such market valuations in the future. Generally speaking, Tesla is positioned well to continue growing in the future thanks to the increasing adoption of electric vehicles. While the company could be negatively impacted by the growing competition in the EV sector and other unexpected setbacks, it is likely to continue its success over the long term. Do you believe that Tesla is a good stock to invest in for the long term? Let us know in the comments.